Everybody to the Option Professor webinar on the swing trading. And I'm going to be giving you details on what I look at when I do or look at swing trading. And swing trading, I'm going to define as trades that are less than a month, could be 1 week to 3 weeks or 4 weeks, and then others that are beyond 1 month but less than 3 months. So basically, those are the two time zones that I'm going to be kind of using when I do an analysis. Now, a little background on myself. I'm a graduate of Boston College, and I have been in the investment arena here for decades. I've done hundreds and hundreds of seminars around the country for thousands of investors. So at the end of the day, I try to bring my knowledge and experience to you. And today, of course, will be all of my opinions and all of my observations as I see it in my view. Okay, we always suggest investors check with their brokerage firm to see what's suitable and what's not for them. All right, so we are going to start out here, and we're going to look at the stocks again from a short-term trading basis. The first one here is going to be Microsoft. Now, really, you could go into a lot of ways to trade short-term, and I mean, you could go on and on. I've been around a long time. Used to be the market creates a opening range in the first hour, and then you play the breakout of that range. That's another way to go. Another way to go is what time of the day it is. Some people used to trade at 10 minutes after the hour, and then at 20 after the hour, and then at the bottom of the hour, short-term. Right? So there's a lot of different mechanisms to try to figure out. I'm sure you can follow volume and other factors as well. I'm going to keep it a little bit on the simple side here, but I think it obviously you'll see from the charts it has merit. So I am basically going to be using two main things as my guide. One is going to be a short-term moving average. Sometimes now we're again this. Beginning of the meeting is going to be on the 3 days to less than a month. Okay, so it could be 3 days, 5 days, 10 days, something like that. Again, I think you stay with a trade as long as it looks good, or unless you want to be out at the every day, then you just have to close out at the end of the day and see what the chart looks like the next day. Again, I understand overnight risk, and I understand that people like short-term trading a lot because they feel like they can keep the risk on a leash. Whereas if you go overnight or keep it long enough, something out of the blue could happen, and then your risk goes through the roof. So I understand, the reasoning behind the short-term trading as well. Anyway, here we have Microsoft, and this is going back again. This is a monthly graph, because I'm using the monthly graph for the shorter term trading, and I'll use a 3-month graph for the longer, for the shorter swing trading, and the 3-month for the extended one. All right, so here you go. I'm using a 10-day moving average here. If you want to tighten it up, you could use an 8-day. I don't know that it's material different. And you can see Microsoft here went down to 188. Well, let me see the signals you got. First of all, the direction of the moving average is very important. Can you see that it can get breached every once in a while, but then it gets going? Because the moving average direction is very important. So these little violations here are not that important because of why? The moving average itself is moving in that direction, okay? So let's say we're looking at, let's see where the date is over here. Okay, we're looking at June 4. We have a low point here at about 181, 182. Okay, we're also looking at that point, the RSI getting above 50. I say when it gets above 50, it's in a bullish zone. Now, also when it got above 50, the market jumped above the moving average there and started trending up. So realistically, your buy signal's right here at about 184, 183, whatever, right there. And you could ride the train up. And again, it violated, but it did not turn the average down. So the way I would handle this would be that if I bought in here, I might put a stop under this low right there. Keep it tight, 183, something like that. And so when it hit this low, it was 184.50, so you wouldn't have got kicked out. So you put a stop in there or some kind of mechanism to get out. And then you don't get out because of the fact that it jumps back up above the line and you got a nice ride. And you rode it all the way until it broke over here, which is 193. So 193 minus 183, you picked up 10 bucks. And then if you're the kind who can go both ways, you could sell it up here at about 193 and you ride it all the way down here until it turns up. And now you're looking at 187. So another $6 there or something like that. Now you get a bigger move here now as it turns up. Now let's look at that RSI. Yeah, you see the RSI when you were selling was under 50, right? So you had an RSI under 50, you had the market breaking under the average, that's your signal. Now, what about up here when it went positive? Went positive on, let's see. Okay, RSI went positive right here. Let's get the actual date here. Yeah, RSI goes positive right here, and notice it's right when it's crossing the line. So there's your buy signal and where you're at, about 187.5. Okay, does the moving average ever turn down? No. So what are you doing on the way up? You're moving your stop up. You started here, you move it here, right? You move it to there. It comes down, does a double low. What do you think you're going to do when it pops back up? You're going to put your stop there. Okay, then it comes up here. You know, good place to stop, former highs or support, keeps going. So you got your stop right there. Let it trade a little bit, comes down and gets near you, but doesn't kick you out. And then it's back on the bicycle. You get your sell signal up right around here, which is 200. That's a pretty good ride. You jumped in here at 187, 188 to 200. That's 12 bucks. Nothing wrong with 12 bucks. Now it get a little sloppy lately, right? See, on the longer term graph, what I saw, and I did this in my update, so people who get my update are aware of this. I saw a divergence, and the update that I gave last week pretty much told you that. On Tuesday of last week, we got a sell signal on all the big ones: Apple, Amazon, Netflix, Google, Microsoft, all of them, because they made a new high, but the RSI failed to make a new high. Now that was on a longer term chart, but it was a signal that would have probably been confirmed a little bit by some of the other action. And it was at least worth a downdraft trade. So anyway, where we are now, we got the RSI back above 50, right? So how's the market looking? Market jumped above the line here, about 197. So 197, you should be in this thing. You can keep it pretty tight, or you can give it down to 196 there, 195 3/4. But if we open up higher tomorrow, and this 50 starts going up toward the blue zone, you're going to be in for a ride on Microsoft. If not, kick it out. So that gives you a little bit of an idea. And I was going to go through a few different stocks here that are kind of in the news. Some of them are going to be what they call, well, let me show you some epicenter stocks. We call these epicenter stocks because they were the ones hit the worst during the drop, meaning Starbucks wasn't open. What do you call it? Booking.com wasn't booking. Southwest Air wasn't flying. Marriott wasn't hoteling. You get the idea? Now, there are some who believe this is where the big gains are going to be in the second half of the year if we go and normalize the economy by the end of the year. Because that means these companies that are underwater, because they have no customers, are going to get their customers back, and obviously, or some of their customers back, and it's going to improve their lot. Okay, so let me show you some epicenter. And when I say epicenter, we're not going to look for the worst company in the worst sector. We're going to go with what they call the survivors. And why do you want to go with survivors? Use your common sense. If these guys are out of business, are going out of business, the people that survive are going to have a much bigger piece of the pie. And with the technology they figured out, they'll probably be able to goose their earnings a lot more than people think by cutting back on personnel and cutting back on real estate and things like that. Anyway, so let's start out and go through the epicenter stocks and see what they look like. First one we're going to look at is Southwest. All right, Southwest. Let's see. Okay, Southwest, and again, this is only going back a month. It gave you a pretty good look. We're here going up pretty good, and got your buy signal right around here at 32 bucks. Ride it all the way up. Got kicked out here maybe because, well, your stop would have been maybe right there, so you could have got kicked out a little bit. But the bottom line is that even when you get kicked out, you know, you're still looking at a moving average that's flattening out. So you're kind of waiting, because once it starts flattening out like that, it does make some sense to wait to see if there's going to be a rollover. And obviously when it gapped down here, let's see what that RSI was doing. I'm sure it was getting under 50. Yeah, there you go. RSI was getting under 50 right around here. And that is, let's double check. RSI under 50, right around there. So hang on a second here. Yeah, so right around the break, the RSI breaks 50. That's a sell signal. This thing is trading underneath the line. That's a sell signal. So you want to be selling it or doing something with puts, whatever. And then basically you're saying that you're going to ride it down. See, you popped up here a little bit, but if you sold it up here, it never got to your sell point. So you can still ride it down because your confidence comes from the fact that the moving average is still going down. Okay. Now, it's been a little bit of choppy here. It gets down here. Obviously, you know, if it gets down far enough and you just want to get out, you could always grab your money and run. You know, you got in here at about 38 bucks. Where's it down here? 33 bucks, you know, pick up 5 bucks. Again, this is short-term trading, so it adds up, right? All right. Now, it gets back on the upswing here. And then it has a little bit of a fill this gap type deal. So that's a rough racket. You probably got kicked out here. You come back in. You catch a little bit of a move up here. When it gets way away from the moving average, I don't care if it's a day trade or any other trade, it becomes a situation where the likelihood of coming back to the line is high. So, you know, if you want to take profit up here or do something to reduce your risk, what does that mean? I'll blow out the stock and take 7 bucks and I'll put 2 bucks into a call. I'll come away with 5 bucks in my pocket and I'm still in the market. But do something up here just in case it comes back to the line, which you can see it tends to do, right? All right. So basically, it's been meandering, and then it gives you a down move. Now, right now, and I'm going to get into the right nows on a lot of stocks so we can get through a lot. Right now, you got to be long this thing here, but look at the RSI. It's pretty elevated. Pretty elevated. If it gets elevated, sometimes it's prelude to what? Coming down, right? So it's had a good run. Your buy point was here. You could have sold it here on a short-term basis and grabbed 3 bucks. See if it'll pull back down here. If it pulled back down here, it'd be a nice thing to have. You know, again, if you make 3 bucks on it and you can see a call option at 36 going for $1, you take your $3 gain on the stock, you throw $1 in as a tip, and that tip, if it goes up to 38 or 39, is your new long position, but it's got limited risk. This is how you can use options and trading together. And people always say options are risky, and they are, but they can also, in this case, reduce your risk in that what? If the stock's going to tank back down to 31, you'll only lose the $1 at the 36 call area, not anything more. Or the 37 call, whatever. You got to price it out, right? So that's how you can trade and also use the options at the same time. But it does look like Southwest is trying to go up. Another one people like in the airline as far as coming out the other side is Alaska Air. Okay, Alaska Air, where are you here? Here you go. Just like Southwest, but not nearly as overbought. Let's see what the RSI, oh, the RSI. So the airlines have had a pretty good run. And the last times they get into this blue area, they can go for a while. Let's just see how far of a while. June 4th to June 9th. Yeah, they could have a little bang to the upside, but it's a prelude to them coming down. Has been. Again, they also were at high levels here. They're not at the same high level as they were. In other words, they're not at the lofty levels, so maybe it can hold this. I personally wouldn't, on a short-term basis, I would have a little bit of trouble with this unless I just felt like, you know what, I think they're really going to stampede into this stuff. And I think the end of the month and into next month, people are going to start really allocated into these, shall we say, laggards. And I want to have a position. But you know what, in this kind of stuff, you might be wiser to look at a long-term call position and then forget about it and see when you wake up in September, December, or next year, if this thing could be a lot higher. But on a short-term basis, again, it wouldn't be my cup of tea to get into stuff that's already in the 75s, unless it was a deal where I just thought it was a great momentum play, and then I would put it on a short leash. So, if you got in here at 36.92 and you want to put your stop under 36 and see if there's anything there, God bless you. But, it's a fairly extended RSI. Okay, so in the air sector, that was what a couple of people are looking at. And in the hotels, let's look at Marriott. Okay. Marriott is turning as well. Okay, what's the RSI look like on Marriott? Well, they're all pretty good. Like I say, it's not in the blue zone, but it's definitely up pretty good. Again, not the greatest setup. The greatest setup was to buy when the RSI crossed, which is right where? Right around here. So you'd be in there at about 80, 81 and a half, and it traded 86. So the trade's already happened. I'd use the RSI. When the RSI crosses 50, under or over, not a bad time to look for a good trade. Gets up to 70 or better, it could be a deal where you missed the boat. Doesn't have to be, but it could be. And it's not one of the better setups in my view. Again, if you want to play the momentum train there, close at 86.50. You got a low there of 85. You put your stop there and see if it's going to be, gangbusters. Another hotel stock is Hilton. Let's look at old Hilton. Okay. Hilton is up today. And yeah, similar to Marriott, similar to all the epicenters. You noticing that? Airlines have the same look. They're all at a pretty high situation there. The question is there going to be a stampede into this stuff because it's underinvested in these portfolios? And is there going to be a rotation out of tech, which is kind of slowing down, and out of large cap tech and growth and into some of these things? And if there is, there could be a substantial buying spree coming in, and a substantial buying spree is, more than it's like when the algos go nuts, right? Once they find out that the shorts are covering and the sellers are nowhere to be found, they press the buy side, just like they do the sell when the opposite happens. Okay. So Hilton right now looks like a buy, but again, the best time to have bought is when it crossed the line, which is where it crossed is here at 70. So 70 to 74. If I had to do anything again, I'd probably blow out the 4, put on a short-term call with some of the profit, and then see if I'm lucky or not. Let's see. Oh, yes, Starwood Hotels. What's that look like? Okay, Starwood Hotels. I think they have DoubleTree and a whole bunch of other ones. Okay, Starwood. Lagging, a little bit weak. What's the RSI? Just trying to get through 50. So this would be interesting in what way? It's just getting through 50, but it's failed at 50 a couple of times. So if we can get this thing to turn up, then this thing could have some legs. Right now, though, I wouldn't trust it simply because of why. It could be just filling the gap at 15, right? And because the moving average is kind of spotty and looking like it's going down. All right. Next one after that is going to be in the energy sector. You know, these are the ones that people are going to, they're saying going to play a bigger catch-up game. Chevron. Okay, Chevron a little bit shaky here at 87, but the moving average looks like it's trying to bottom, and you're at 48. So you know how I would play this, in my view, my observation, my opinion. I'd like it to take out 88, right? Take out 88, and then if this RSI can, you know, start really going through the 50 number. First, I'd like to see the RSI go through the 50 number, okay, and not just by 1 point. You can see 1 point is not so good, right? 1 point, 1 point. You know, say this RSI can get to like 53, and we're now trading at 88. Now I can put a stop underneath 87, and then I can see if I got something going, because it does look like it's possibly turning up. This is actually a pretty interesting one. Turning to Exxon. Okay, Exxon is 44 bucks. Same idea as Chevron. See, same idea. So it looks like the oils are on the verge of maybe turning up and having a nice rally. Not happening yet, though. We're not above 50, and we are just here. Obviously, this would be a great thing to clear, which is 44.5. There's a big gap up here where 46, 47.5 might be interesting. Definitely has a pretty good setup, both of them. All right, where are we now? We're in the food restaurants. Let's look at Starbucks. Okay, Starbucks. What's it look like? Okay, had a turn here, but what's the RSI doing? Yeah, see, it's way up. Well, it's not that way up. I'm sorry. It looks like it's going. So you got a get out point right there at 72.5. Where did it cross the line, though? It crossed the line when we were at this price right here, which is 71.75. So that's where you should be getting in, and then you should be staying in, and either putting your stop right now at 72.50 where the average is, or, you know, if you really think something's going to happen, if you've got $2-3 and you want to turn that $2 or $3 into a short-term call, you got leverage, limited risk, and might not be a bad play. But this thing also is turning up. But you know, the question is now that's a pretty good RSI though. It came down and now it's looking like it wants to make new highs. Getting this RSI above 60. You know, staying above 60 to 65 would be very, very positive, because that's when the stock tends to have a move to the upside. Case in point. See this big rally right here? Well, look what the RSI was doing. Got above 50, stayed above 50 during the rally. So anyway, Starbucks, not bad. Not bad. Next one up after Starbucks is Chipotle. Okay, Chipotle's up $12.80. It's an expensive stock, so it's hard to trade unless you have a big account. I guess you could trade one share a lot of places, so that's $1,000, right? Anyway, what's it look like? Chipotle on the down there. Yeah, just turning up. Yep, doesn't look bad. Right at 54 after bouncing to 50. So your buy signal came pretty much in. Let's see. Okay, that's about there. So we're looking at, yeah, right around here. 1036, 1039. And this low here would probably be my get out point right there. And if this thing starts getting some acceleration, it might be able to take out that 1056. So you know where your stop is, you know where your momentum is from the RSI. You try to play it that way. Let's see here. Oh, how about Mickey D's and see if there's something going on there. Okay, Mickey D's up 3. Yeah, like you can see, people are putting money in there today. There's no doubt about it. These were way stronger than your tech stocks today. All right, you see the turn? There they are. And this thing's at 60, and it looks like it could go. So, it closed right at the high of the range. So this is obviously a go. Buy point, again, just like Chipotle, 180. It's already at 182.30. And there's your get out point here, or turn it into an option, whatever you want to do. Okay. How about the restaurants like Darden? Again, up 5% today. I'm spending time on these because I don't know if this was a one-day wonder or not, but if it's not, there could be some legs here. Again, just imagine people rotating a percentage of all the money they have in tech into these underachievers. And underachievers is also a misnomer because they're way off their lows. All right, so anyway, let's see now this thing has a little bit of a high RSI up here. So that would make me a little bit concerned. And if it makes a new high and this RSI does not make a new high, that's called a divergence, and that's where you get the sell signal. So right now it's a little bit dodgy, but basis the moving average, it's good until it breaks 74.50. The direction of the moving average is up. And the only thing that's a little bit nerve-wracking is the RSI is a little bit elevated, but not tremendously. Yum Brands. Yum Brands, Y-U-M. Okay, Yum Brands, the last of the restaurant guys. I got to go to the chart here. Hopefully they saved all my settings. Full chart. Okay, up 2.5%. Not quite as much as some of the others, but still not a bad day. And on the chart, again, you gave you a buy signal right there. What's your RSI doing? Elevated, more like the last one. So again, when it gets to these higher numbers, it's sometimes a prelude to a high point happening. Not always, but sometimes. So anyway, Yum Brands looking good as far as the moving average, looking good as far as the price, and not unbelievable as far as the RSI. But, again, sometimes RSIs can stay stubbornly high for a while too. So it's not the only thing to look at. Personally, I rather look at the price and the moving average because that's based on, obviously a real price and a real set of numbers, right? I always say moving averages don't lie, people lie. So that's why I like to use them. Okay, the travel has been a nightmare. So let's see how those nightmare stocks are going. Booking. Okay, Booking is going for up 3.37 again. These are the ones I'm showing you because these are the ones that look like they're trying to make the turn. Yep, that looked bad, right? 58. So you got a good RSI. When did it cross? It crossed at right around this area here. So you're long at 1540. It's already at 1592. Market right here is at 1566. So you can move your stop up to that neighborhood if you'd like. But it does look like it's pretty darn good. And if it takes out this 1600 area, obviously it could make a run at 1650. That one looks pretty good. Next one up is going to be, who goes with Booking? Expedia. Expedia. Let's see what it says. Okay, Expedia on its way. A little bit on the overbought side, but not tremendously. Getting a little bit far away from this average initially. So again, it runs the risk of having a pullback. Wouldn't be my cup of tea. Doesn't look bad, but not the entire setup that I'd be looking for. Okay. What about the cruise lines? Everyone's saying Carnival Cruise. Let's see what Carnival Cruise is doing. Okay, Carnival Cruise on the upswing. RSI a little on the high side, but it can go. It can go. That blue area here is all above 75 about. So it still has legs to go. It does look like it's trying to go somewhere. But again, these things also were trying to go someplace and then tank. So you got to keep them on a short leash. It looked like it was going through the roof here, right? On this big run. And then how much did they give back? So you got to be careful here. I'm just saying over the next 6 months, these might not be bad tradable stocks if we're going to see somewhat of a return for people going back to doing what they did pre-COVID, like going to a restaurant. Okay. Let's look at gaming. And, you can put it all into one. Well, let's just look at individuals here. One of my favorites is the Sands Hotel because Adelson seems to know what he's doing. And it's up 3% today. And looks like you're getting a turn here. And the RSI is not bad. So I would say keep an eye on Sands. Looks like something's going on there. When did it cross 50? What was your buy signal? Buy signal was right there at that low. It doesn't give you the absolute low, but it gives you, not that far from it. And then it also gives you when momentum is turned. You don't want to be the first guy in the door in a fire, right? So here you go. And you got in there at 43. It's at 44 and change. That's not bad. All right, let's look at MGM Grand. MGM Grand. Turn, just like the Sands. And how's the RSI? Not too shabby. Keep an eye on this. I would keep an eye on the gaming stocks. Looks like they're trying to make a turn down here. Again, all of these companies had a big run and they tanked. So again, you got to keep them on a short leash. That's why you're doing short-term trading, right? But when they get momentum, it was up 7% today. So that buy signal that you got was worth some money because on these smaller price stocks, $1.10 is a lot more than if it's a $50 stock by percentage, right? So some of these cheaper stocks sometimes can be better ones to go with because you get a better percentage bang on your buck. All right, we talked about that, and then we talked about this, and then we're going to talk about, let's talk about a gaming company called Churchill Downs and see what that looks like. They've got horse races, they've got slot machines, I guess, and all kinds of different ways of gaming. And today they were up 5.5%. So they're back onto the gaming stocks, it looks like. And yeah, still above 50. This thing's just turning. You could pull back as long as it holds this 130 area. This thing could have could be a good short-term trader. Let's look at DraftKings. That had a big pullback. Maybe that pullback's over. This is one of the newer issues, and everyone was plowing into it. And they tell me, some pretty famous people are in there, investors. Yeah, it's a little bit, doesn't look as good as Churchill, but let's see what the RSI is. Yeah, RSI is not good yet. So you wait on this one. Because look, okay, you want to see the sell side? You got a pretty good sell signal right around here. Let's see what the RSI was doing if I could scroll down. So the RSI broke here, which corresponds to about right up here. Yeah, so you got a sell signal on this thing at 40. Now, that's not a bad place to get a sell signal because the darn thing dropped all the way down here to 30. So obviously, and the direction of this thing is still heavy. It would become a lot less heavy if we close above 35. We close above 35. You get the RSI above 50, right? You close above 35, you get the RSI above 50. You get this moving average, which is pointing down, pointing up. And then you got some business going on. Then you got something, to look at there. All right, so next one is in the area of housing. What do we just have? The best housing numbers in the history of mankind or something? Well, you got to understand that we're coming out of a very low threshold. So all these numbers on retail sales and all these numbers on housing are starting from a very low base. The key is pre-COVID, we're nowhere near the levels of anything. But you cannot deny that the bounce has been strong. Now, again, I love the housing area because millennials are going to move out of their house and start buying a house, which is great. And it looks like a situation where you're getting some action to the upside. Now, these things are probably high on the RSI because they've been doing pretty good. Yeah, the RSI is a little bit elevated. But, where did it cross, right? I'm trying to tell you, you can always find out where it crossed. And it crosses here at 42. And where's the thing trading at? 43. And it was as high as 40, almost 40, well, just under 44. So maybe there's a little bit more leg lift in this thing because, again, there's a gap between 44 and 44 and a half. So you might be able to make a few bucks on the upside here. Let's look at some of the big ones that people like in this area, which is Lennar Homes. And in Lennar Homes, that was up 3% today too. Yeah, again, the buy signal more than likely came, let's just double check, but probably somewhere under 59. There you go. Yeah, you got the thing right around 58 and change right here. So, you're in at 58 and change and the darn thing's up at 60, 61. Nothing wrong with that. But again, part of the epicenter that was dead during the shutdown. That's the theme that I've been working on here for 35 minutes. All right, what else do we have here on the old docket? How about Toll Brothers? Somebody told me they're trading under book value, which is a good measure that it's trading cheap. Let's see if cheap is cheap for a reason, or did it move today? 7% ain't bad, yeah. So where are you with Toll Brothers? You are at 31.41. You got your buy signal where? You got your buy signal right here. The other thing I'll give you a tip on is if you find yourself with a low surrounded by higher lows, you can take a stab at it and put your stop underneath the low. If you find at a high point, you've got a high point surrounded by lower highs, you can take your shot and put your stop up there. Another one, you got a high point surrounded by lower highs, you can take your shot at selling and put your stop up there. Anyway, looks pretty good. Kind of extended a little bit there, but it's trading below book, and obviously that's going to be the value investor's dream. So it could be a good future for Toll looking down the road. And Pulte Homes. Okay, Pulte Homes is, made a turn just like everybody else. Probably same buy signal. You notice the sectors kind of move the same. So there's your buy signal, 32 bucks. You're at 33.50. Your RSI is at 63. Plenty of room to go on the upside if you want to. Again, you have a high there surrounded by lower highs, which is not a good sign. Maybe a pullback in store, right? But again, RSI is not too bad. Market's made a turn, and the numbers coming out are solid. All right, so housing, we went into that. That looks pretty good. How about you rent a car? You know, Hertz is out of business, right? So who do you think you're going to rent a car from? How about Avis and Budget? And so Avis and Budget were up 10% today. See, this is why in my weekly update, I talk about these things, because maybe you're not looking at it and you can't look at everything. So getting the weekly update obviously has some value. And it's free of charge. So here you go. We crossed over on the rent-a-car deal right around here at about $20, $20.50. It's at $22.72, already on its way. RSI is a little bit high there, but 66 is not blue, is it? And we could get into the blue if things start running. So again, you know, some room to run, and momentum's good. Price is good. Moving average pointing up, not bad. Where are we at here? That's your rent-a-car. All the other ones are out of business. So basically, those are some of the ones that I wanted to show you that is on my radar with the epicenters. If you notice, the companies are big. They are probably going to be surviving. When they are surviving and other people are not surviving, it will be increasing their market share. And the theme for people that are bullish, because obviously there's two camps. The bullish camp believes that people have money and they're going to want to spend their money. And when they can, they're going to start going back to things they used to like to do. And if that's the case, then these companies that have been obviously devastated have some ability to rally. They may not go to pre-COVID highs, but they're so far under pre-COVID highs that it's a joke. You know, they priced them as if no one's ever going to rent a car the rest of their life. They priced them as if nobody's going to go out to eat. They priced them as if nobody's going to stay at a hotel. And that's probably not true. Some of the ones that are big today, let's look at the ones today. Boeing. Would you have been in or out of Boeing with this approach? And when would you have been in or out? Let's see. Well, you'd have been in. Where's Boeing? Oh, let's find out where it crossed at. It crossed at around 170, right? Right around 170. So you're in there at 170, and then it pops, and now it's 194. How about 24 bucks in Boeing? Not a bad deal. Now, what about it? Well, now it's in the blue zone. Give it back. Give it back to them. But maybe it's got a little bit further to go. You got a gap up there. Maybe they're going to go try to get it. That's between 210, 216. Then you got another one between 227 and 228. Maybe, or maybe just go up to this high point here, which is around 200. Not a bad time to convert. What does convert mean? It's not a religious thing. You're just going to convert your stock position into an option position. And by doing so, continuing in the game, but taking your money off the table plus some, leaving a little bit on the table, limited risk, and it either flies or it duds out. If it duds out, you're going to lose a little bit of your profit. So what? All right. Let's look at some of these other ones. Zoomy started to turn the corner to the downside. Let's see if that looks like a trend. All right, well, Zoom has rolled over a little bit on basis the moving average, and let's see what it has done. Now, this is an increase. This is an increasing price. So if the RSI is not increasing during this period, that was your signal. And look, RSI was not making new highs during that entire period. So that's your signal. You want to get on the sell side. You know, again, my opinion after my experience is that if the RSI is not confirming the move, meaning it's lagging a former high point of the RSI, it's an indication that you're looking at short covering or exhaustion. And so far, it looks like that is the case here. Now, the trade might have come and gone because where's the RSI now? Nope, it's still in the dead zone. So it dropped here. You'd probably be able to get this thing, if you're watching this as an indicator, somewhere in this neighborhood between 250 and 257 as a seller. Now it's here. Okay. So if it pops and turns, maybe you're back on the train. But this thing's had a big run. We all know they've got a zillion subscribers. We all know that everybody likes to use them. We're using them right now. We all know. We also know that their PE ratio is like 2,000 to 1. We also know that the stock has gone up ridiculously high. So do you think that some of that has been discounted? And that's what you got to think like. If everybody's buying, right? If everybody's a genius buying, who's selling to these people? Well, the guy who's going to get paid if it drops down here. So whenever you get into a trade, somebody's going to be an idiot, right? Buyer or the seller. Well, if that's the case, think of each side before you do it. If a guy is buying this kind of a rally and you can see the RSI is not keeping up and actually fading down, well, the likelihood that these buyers up here weren't the sharpest tools in the shed is pretty good. So far, so good. Now, this is the kind of company that could be up at 270 tomorrow. Let's face it, right? Let's look at some other hot ones that were in there. Teladoc. These are the virus ones, we call them, right? Because they are a product of people changing their behaviors. Now, Teladoc wasn't friendly today either. So it looks like they're taking off some of these ones that have been bid up through the roof. Where did Teladoc cross over 50? Well, it crossed over 50, then it got above 50. Most recently crossed over 50. Let's see. Well, under 50. Oh, right around the 25th. So that would take us probably somewhere right around here. So basically this thing, it gave you a sell signal, then it gave you a little buy, but that's not a very good buy. You want the thing to look like this. You want the thing to look like this, not just a little squiggly thing. Okay. So the bottom line is, though, this thing is in the sell zone right now as far as we can see. All right. How about that Peloton? Everybody's got this $2,000 bike. And now with the weather good, they probably rather walk than ride a bike in the house. But this thing has done very, very well. And one of the reasons it's holding up better than others is they have a subscription business. And when you hear the word subscription business, that means they've got ongoing revenue, ongoing streams of cash flow, and people like that. That's why Amazon is so popular with their Prime. And that's why Apple is so, popular with their deal. So, people like to hear ongoing revenue. All right. So anyway, this thing, what did it do here? Well, it could be turning up. See, it's just going through 50, right? Just going through 50. And again, they're a different breed than the other two I mentioned. So if this thing starts getting above what? Getting above 58, and you get this moving average to kind of squirrel like this, then this thing could be on its way again. Starts going, it's at 50. So if it starts going under here, you know what that 50 is going to be. That 50 is going to turn into 40 or 35. So the sell side is the where to be. Right now, I would just watch this thing, and if it started breaking under probably 56.50, and I saw that RSI going down, I'd be looking at things that benefit from a drop. And how many people are in there to sell? Let me explain something. And this is only going back a week. You know what this chart looks like if you went back 2 months? Tom, Dick, Harry, and every one of their uncles and nieces are in this stock. So if something occurs that makes people want to get out, you don't think the algos know that there's not enough buyers up here if something happens? So this thing could get pressed quickly if something came out of a not bullish fashion. What about Spotify and Shopify? I hear this all the time. I don't really follow them much. What are these two people doing? I know they went through the roof. I know that much. Let's see. Well, today wasn't up very much. On a big up day? That's not a good sign. What's the RSI doing? You see all this rally here? All that rally? What's the RSI been doing? Yeah, look at the RSI. Never got it back to the blue zone. Now you got to be a little careful because it is bouncing off that 50 number. So if this thing does start breaking above 267, or better, and that moving average starts going higher into the 50s, then this could be a buy in here. And likewise, a break under 261, 260, you could maybe see selling, especially if that RSI breaks under 50. What about Shopify? Up 12. There you go. And this could be what Spotify is going to do because Spotify is bouncing off the number as well. So you see, when when they get it above 50, that's in a positive zone. And now you've got the actual stock here hanging on. Okay. So, and did pretty good today, because your buy-in here is at 912. It's already at 922. If it can pop, you're looking pretty good because there's some room to go here. Okay. So this is not a bad one to look at and keep on a short leash. It looks like a pretty good situation. A couple of sectors that are out of favor did pretty good. And I'm going to give you a couple of ETFs to look at. This is the Vanguard Industrial. Okay, yeah, see the turn? All right, and there we go. RSI got above 50 at 124 area, and it's already at 128. So good time to have gotten in, and now you're riding. Turning towards another one, which is materials. Materials. Again, turning up, coming off the 50 number, so it's in the positive zone. If it's trading in the 50 to 70 area, it's a positive zone. You can get rallies during that time. This thing, again, you can keep on a short leash as well, though, because if it starts, hey, listen, from what I can see, and I don't make the numbers up, it looks like it's above the moving average. The moving average looks like it's going up. The RSI looks like it's at 50 and bouncing up. So I would be optimistic on it. I'd be optimistic on it. Couple of, that wouldn't be the, let me just see a couple of other things. Oh yeah, before we close out, what I wanted to do is go over international. Because, the valuations overseas in some instances are quite a bit better than they are here in the States. And so, let's take a look at Europe. There's many ETFs out there. I'm just showing you one. Okay. Looks like it's trying to turn. What's that RSI telling us? Yep. Okay. So the RSI is above 50 and has been for a while. That's constructive. Okay. Moving averages are under the price and rising, but not that great. Getting above $50 would be $50.50 would be nice. And getting the moving average to start going up would be nice, like it did here, where you can make some money. But I'd keep an eye on Europe, VGK or whatever you use for Europe. The other one is the Pacific. And that would be Australia, those people out there. Again, very similar. Can you see they're all at the same point? So that's why I'm saying Keep an eye on the international. I just gave you what? The Pacific Rim. I'm giving you the Europe. And now I'm going to give you emerging markets. And again, same situation. So if they start getting stronger from here, this is a train that might be leaving the station. This was one of my favorites that we've been watching. Let me get the symbol correct so I can get it for you. Where are we here? It's V. Give me 1 second because this is worth the wait. No, not VBIX. No, VB. Okay, you ready? Here it is. If we're going to get a turn, you know, this thing has already done good this year. If you look it up, go look at their holdings. And this is called international growth. Now, today, I don't know how it did, but it had been doing extremely well. It doesn't go short term because it's a fund. Okay. Anyway, that's something to look at if you want to get exposure to international growth. And again, it's not a short-term trading vehicle, so I shouldn't have brought it up. But some people have other money as well, so it might be something worthwhile to look at. Let's look at semiconductors real quick. And NVIDIA. All right, there's your semis. Trying to turn up. There you go. So the semis might be interesting, right? Just going through the 50 number, not too far from the moving average. Where'd you get the buy signal? Right around there. Which would be, yeah, right around this neighborhood. So keep an eye on semis. One other thing, a couple more, let's go over real quick is Japan. And Japan, nope, not above the line yet, but monitor it, See what happens there. The other ones seem a little stronger. And then what other one was I going to? Oh, yeah. Can't forget these guys here. What's China look like? All right, on the RSI, China is still weak. One last one I wanted to bring is the general energy one. Because some people trade ETFs too, and you can trade them, you know, I don't know if everyone loves you trade them short term, but it's not against the rules. But again, if you're going to trade these, again, Exxon and Chevron is just as well. I just wanted to see what the overall thing is doing. Yeah, so we need to get a little stronger on the general energy sector to feel good about it. You're still trading at 47. You really want to get above 50. So it might be a little early for the oil. Might be a little early for the oil. One last thing on interest rates, TLT. Okay, TLT gave you a nice little buy signal down here. When it broke 50, then it gave you a sell signal, then another buy signal around the 24th of the month. So right now, I gave you a buy signal right here, 161. It's trading 164. Starting to turn over a little bit, but the RSI is still good, isn't it? Yeah. So anyway, watch this. If the RSI goes underneath 50, there could be a sell on TLT. And if the market takes off, it probably will, because then people will be thinking rates will go higher. I've got 1 minute to go over gold and silver. GDX. I tell you, everyone's pounding the table on this thing. It either better break out or it's going to be one of the best sell opportunities in the history of mankind. I mean, you know, that's how I feel about it. Here's my problem. Gold has not gotten above the 1900 and 1800 area. These stocks used to be trading, GDX used to trade at like 70 last time gold was in this neighborhood. Now all of a sudden it's going for half price. Why is that? Well, if somebody's wrong, either the gold price is wrong up there at 1800 and it's going to come down closer to where its moving averages are, and the moving averages on gold come in at places like 1550, 1450, you know, plenty of room underneath the market for gold to drop if it wanted to on the moving averages. And the velocity of money is very much in the tank. So it's hard to get inflation no matter what the money supply does if you have no velocity of money. So I think this is a very exciting time for gold, because it's either time to get out at 1800 or 1900, or if this thing starts clearing above 36, maybe double up what you got. Because if this thing plays catch up and gold goes on some kind of a parabolic run, these things will be a good place to be. Another one on the other side of the coin is silver. I think gold at a very big crossroads here. The bullishness is all over the place. The flow of money into gold is unbelievable. The coins are going for $150 above spot. I don't think you can find anybody who says gold's not going up. But it hasn't gone through 1800, and it hasn't gone through 1900. And these mining shares are lagging. So you have to be suspicious. Now, on the silver miners, these were also way higher. But they're not in bad shape. I like silver better than gold because I think it's more of an industrial metal, and if the stock market is going to rebound, it would probably do better for that. It doesn't need inflation only. And if it gets above the spot price above 19 or 21, it could really go. So, you know, if I had my druthers, I would probably be looking at the silver miners rather than the gold miners, because they could play a mean game of catch up if things turn. But right now on gold, I'd like to see that GDX above 37, and I'd like to see gold above 1900, and then maybe add, because if that happens, maybe there's something going on beyond the numbers. What I'd like to do right now is close up by inviting you to optionprofessor.com and invite you to receive the free weekly update, where I go over a lot of different markets, a lot of different ideas. I just give you my opinions and my observations. Obviously, you all have your own circumstances, you all have your own brokers, and you all can figure out what you're doing with yourself. So I'm not giving any specific recommendations, but I do give you my opinions on things and my observations. To get the weekly update, you could email Option Professor, OPTION, Professor, PROFESSOR, @gmail.com. optionprofessor@gmail.com, and let us know you'd like to be put in the queue, and we'll make sure that next week's update goes out to you. It's been, obviously, I didn't get over the longer term trading that much, but again, when you use these averages, my view is, you know, the shorter term average is for the shorter term trading, and the longer term average is like 21-day moving average, and maybe the 14-day RSI might be more appropriate when you're swing trading for a little bit longer period, maybe a 90-day period. So those would be the two things that I would change on my chart, and I would follow the same ideas that I did on the short-term ones that I showed you all afternoon. Okay, so with that, I'm going to turn it back over to Anka and David, and thank you everybody for being here, and don't forget to email optionprofessor@gmail.com to get in the queue.